Greetings and welcome to the FinCanna Capital Corp Summer Investor Summit webcast. It's now my pleasure to introduce your host, Enrico Herchak, CEO and Director of FinCanna Capital. Please go ahead.
Thank you all for joining us today, and thank you to our hosts for providing such a great forum for companies like ours to be able to reach investors, and particularly during these COVID-19 times. I know many of our shareholders are joining us today, and I'd also like to welcome and introduce FinCanna to those who are new to our company. For those who don't yet know me, my name is Enrico Herchak, and I'm the CEO and a Director of FinCanna. And FinCanna is a royalty financing company focused on the U.S. licensed cannabis industry with a very strong emphasis on California, and we're listed on both the CSE and the OTC exchanges. During our about 25 minutes together, I'll spend approximately 15 minutes or so presenting our company, leaving the balance of time for questions. And please ask any questions you like, and if we run out of time and I don't get to yours, then I encourage you to contact me directly, and I will follow up. My contact info can be found on our website. Now, please note that I will be making some forward-looking statements during this presentation, so I'm required to point out that this disclaimer section and advise everyone, especially if you're buying our stock, that this disclaimer is also available on our website. Now, before we go any further, I'd like to highlight that we're a royalty financing company, and our executive management team are finance professionals. Myself and our CFO, who founded FinCanna, are both chartered accountants, each with about 25 years of experience, that together cover commercial banking, merchant banking, and senior executive roles with publicly traded companies. We've both been very fortunate to have had a number of big wins, including some very big wins for our shareholders in the past, and we both see an incredible opportunity for a very large financial success with FinCanna. We're also large shareholders who have together invested close to $2 million cash of our own money into FinCanna, and we're very excited about our future. Now, let me tell you why we love our royalty business and see such a massive opportunity. First of all, we are focused on the U.S. and in California in particular, which is the largest cannabis market in the world. To put it into context, the California market alone is larger than the whole Canadian market put together. And I should point out that California has made cannabis an essential service during COVID-19, and I'll discuss California in a little more detail a little bit later. The second main point is that we are designed to be profitable. And unlike the very many cannabis companies out there with big operating costs and big operating losses, we are designed to be profitable and profitable with very little revenue. And I will definitely be providing more detail on this a little bit later. Now, the third main point is that our investment portfolio is diversified over multiple sectors. Now, here's why this is important. Our investee companies, that's the companies that we invest in, do not compete against each other. And in fact, they have synergies working together that include market reach, market data, and of course, diversifying risk. We're also an early entrant in California with an excellent network for future deal flow. We invest in private companies, and here's why this is important. We invest in private companies in the U.S. that you as an individual investor do not have access to. And we find these companies early, and we find them at favorable valuations. And finally, I believe there's never been a better time to become a shareholder of FinCanna. We now have 2 investments in operation, with our largest investment just recently starting operations, and we're expecting big results from them, which I will discuss more a little bit later. So some investors ask me, why are we focused on California? Well, simply put, the U.S. is the largest cannabis market in the world, and California is by far the largest cannabis market in the U.S., with close to $3 billion U.S. of legal cannabis sales last year. And although cannabis is legal in 33 states, plus Washington, D.C., it is still federally illegal, which means financing can be difficult even for great operators. But note, this creates an exceptional opportunity for us to finance great businesses. And once federal legalization occurs, we expect a very strong increase in valuations of publicly listed companies that are operating in the U.S. And next slide here, this shows why we're in the royalty business and why this is important. So first of all, we have low operating costs, we're not capital intensive, and most importantly, we're designed to be profitable. How this works is we invest permanent capital in a business, and in exchange, we receive a percentage of the business's top-line revenues, which is paid in cash every month and in perpetuity. And our royalty revenues are essentially 100% margin business. So after covering our fixed overhead, which is quite low, the balance of our revenues end up on our bottom line as profit. And it does not take much revenue for us to be profitable. And now with 2 of our investments in operation, including our largest one that recently started, we are definitely on our way. And if you want to invest in a publicly traded royalty company in cannabis, we are the only one that's a pure royalty cannabis company. You know, there are so many publicly traded companies in the cannabis sector that have raised hundreds of millions of dollars, are very capital intensive. They're making some revenues, but incurring big losses quarter over quarter. Many of these, in hindsight, were designed to fail. We're the opposite. We have low overhead, low capital, and designed to be profitable. Now, I'd like to talk about our investments and why we're so excited about them. So we have 3 active companies in our portfolio, and this slide shows a summary of each. They're all operating in different sectors, and like I mentioned earlier, they're working together to maximize synergies for market reach, market data, and bringing on new customers. Now I'll go into more detail on each of these 3 investments. The first company in our investment portfolio is QVI, which stands for Quality, Value, and Integrity. It's our largest investment and is expected to be our biggest source of royalty revenue. So first, a little bit about QVI. They are a large-scale edibles co-manufacturer producing essentially all types of edibles and are in essence a one-stop shop for any brand in the edibles business in California. And they're strategically located in Sonoma County, California, situated between the Emerald Triangle and the San Francisco Bay Area, which is one of the best geographic areas and one of the lowest cannabis tax jurisdictions in California. And of course, QVI's principals have decades of related experience. Now, our royalty with them is our single largest investment in our portfolio, and we're entitled to 70%, that's 70%, of their after-tax income. And this is paid in 2 ways. First of all, we get paid a cash royalty equal to 20% of QVI's revenues every month, and then at the end of every year, we will receive a top-up cash payment to get to 70% of their income for the year. And both the royalty and the top-up are in perpetuity. And finally, if QVI is sold, then FinCanna will receive 70% of the sales proceeds, and this could be a very large number for us. Now, I'd like to take a moment to explain why we're so excited to be in the edibles sector. In California, edibles currently represent about 25% of the entire cannabis market. That's 25% of almost $3 billion in sales in 2019. And the edibles market is expected to increase significantly. And this is important. You know, unlike other cannabis sectors such as flower or vape pens, there is significantly less competition from the black market for edibles. Now, this makes sense. No one wants to buy a gummy on the street because no one knows what kind of pesticides or chemicals are in them. Now, it took QVI longer to open up than originally planned, and this was due to a host of issues, including delays in licensing, permitting, and construction. But the important thing here is that they are now open for business. You know, equally as important is that these delays that QVI experienced also represent significant barriers to entry for not only possible competition from other co-manufacturers, but also for QVI's customers themselves, which include both out-of-state brands who want to enter California or existing California brands who want to expand their production footprint. Now, it really takes a long time, a ton of work, and a lot of resources to open up a licensed facility in California, and QVI has done it. And as QVI CEO says, no one wants to produce their own products anymore. What they want to do is focus on increasing their brand awareness and market share, and they want us to produce for them. And the demand that QVI is experiencing is massive. And if QVI executes this plan, then we will all be very, very happy and very, very successful. Now, the second company in our investment portfolio is Cultivation Technologies, Inc., or CTI for short. Now, this was actually the first investment we made, and CTI has been successfully operating their extraction and manufacturing business in Southern California for 2.5 years. Now, earlier this year, they moved from their old facility in Coachella into a brand new, much larger and more efficient space in Palm Desert, which is in the Palm Springs area. I should point out that CTI is really good at what they do. They've won numerous awards for the products they produce, which include high-quality concentrates for white label manufacturing, toll processing, and packaging to hand-selected brands and cultivators. And we're very happy to see that they are now starting to scale up at their new facility. Now, our royalty with them is 10% of total revenues in perpetuity, with 5% paid in cash every month and 5% deferred until the company is sold or goes public. And when this occurs, we're entitled to a very significant share of the proceeds, which ranges between 25% and 50% of the total sales proceeds. And now the third and final company in our investment portfolio is Easy Green Compliance. Now, Easy Green is completely different than the other two investments in our portfolio, which are focused on production and co-manufacturing. Easy Green has what we strongly believe to be the best point-of-sale, HIPAA-compliant software solution for the cannabis industry. They've been very focused on optimizing their software and integrating it with Metrics, which is the seed-to-sale tracking system that is now mandated in 14 states, including California. And Easy Green is now in sales mode with the dispensaries with a focus on California. Now, unfortunately, this is one sector where COVID has temporarily slowed down their sales efforts, and that's mostly because they have face-to-face time as they would like. But they are able to install their software remotely and have key relationships with some very strong members in the industry. And we continue to believe that compliance is going to be huge in this industry. And Easy Green has the best product in the market and will be very successful. And our royalty with Easy Green is 10% of their total revenues, and once again, in perpetuity. Now, I'd like to spend a little bit of time on our leadership team. As mentioned in the beginning of the presentation, our management team is made up of very experienced finance professionals with great track records of success in creating significant value for shareholders, and we're completely dedicated to doing this again for FinCanna shareholders. And we believe in this company so much that we've personally invested close to $2 million cash in FinCanna. We're also surrounded by an outstanding team of directors and advisors with strong expertise covering finance, capital markets, securities and corporate law, cannabis law, and very strong connectors in the U.S. cannabis industry. Now, for a company to be very successful, they need to have a great team, and we couldn't ask for a better, more knowledgeable, or connected team than we have. Now, I'd like to spend a little time on our capital structure. As mentioned earlier, we're listed on both the CSE and the OTC. We have about 100 million shares issued and outstanding and are currently trading at about 10 cents, giving us a market capitalization of about 10 million Canadian dollars, which is significantly lower than all our financing levels, and I personally believe is very cheap, given that our largest investment, which is in the edible sector, has just commenced operations. I should note that in the financing that closed earlier this month, FinCanna CFO and I were very happy to invest another $500,000 of our own money, and clearly we believe in this company and like to show our commitment by writing big checks. And back in March, I bought another 500,000 shares in the open market because at these prices, quite frankly, it's just a great way to reduce my average cost. In closing, here are the key takeaways. We're focused on the U.S. and in California in particular, which is the largest cannabis market in the world. And as a cannabis investor, you really want to be in the U.S. market. We're in the royalty business, which means we have low operating costs. We're not capital intensive. And most importantly, we're designed to be profitable. Our investment portfolio is diversified over multiple sectors. We're also an early entrant in California with an excellent network for future deal flow. We invest in private companies in the U.S. that you as an individual investor do not have access to. And finally, we're at a really exciting growth stage. We have 2 investments in operation, and our largest investment recently started operation and is in the edibles business, which is considered to be one of the super growth sectors. And I truly, truly believe there's never been a better time to become a shareholder of FinCanna. So that concludes the presentation, and now I'll turn to the questions that are coming in. And just bear with me for a moment, please, while I switch over to the slide here that has questions. And wow, okay, so there are a lot of questions coming in. It sure is great to see so much interest in FinCanna. And given the large number of questions, it looks like I will not be able to answer all of them. So if I do not get a chance to answer yours, then please follow up with me, and I will be very happy to answer your questions. So please bear with me while I review the questions. Looks like there are some duplicates here. Okay, so first question, as the CEO of the company, what do you see as the biggest risks to success? First of all, thanks for the question. Great question. So the biggest risk to success is simply our execution by our investee companies, and in particular QVI, which is our edibles co-manufacturer. You know, QVI will be our largest revenue source, and with us now owning 70% of their economic interest, this truly is a company maker for us. Now, to mitigate the execution risk, the entire FinCanna team is very entrenched in every aspect of QVI's business and on a daily basis, including sales and marketing, operations, and finance and accounting. We are not a passive investor, but a very, very active investor with a great deal of experience and are very much part of the QVI team. And once again, QVI operates in the edibles business, which is one of the fastest growing cannabis sectors. They're ideally located geographically and have a very large list of customers who are literally knocking down their doors. Now, QVI just needs to execute, and we're working alongside with them to make sure they are very successful. And just scrolling through the questions here, here's one. Why did you extend the term of the convertible debentures and raise more funds? Great question. So for those who aren't aware, that relates to our debenture extension and additional financing that closed about 4 weeks ago. I should note that when we first raised money through the convertible debenture last year, we were expecting for our investees to be in operation and generating royalty revenues quite a bit sooner. But because of the delays I mentioned earlier with opening up in California, we experienced a delay in our royalty income. If we'd done nothing, the debentures would have matured in January and February of next year. And with a conversion price of 20 cents, this represented a real balance sheet risk for the company. By extending the maturity for 2 years, we essentially have another 2.5 years from now to either generate enough cash to repay the debentures or have significant time to grow our operations where the share price would be higher than the conversion price. So the debentures would convert and never need to be repaid. And with us repricing the conversion price to 15 cents, we believe that we have very significantly reduced any balance sheet risk, and the only significant risk remaining within our control is simply execution by our investee companies. And please bear with me while I scroll through the questions here. Here's one. Can you comment or provide guidance on FinCanna's expected revenues and profits? Well, with QVI just commencing operation and CTI recently starting in their new facility, it's a little difficult to give clear guidance on our future revenues. But what I can say is that we have publicly stated that once QVI gets through their startup phase and based on the demand that they're experiencing, we'd expect about $10 million US in annual revenues. with a strong month-over-month growth curve. This would result in $2 million US in first-year royalties to us before any true-up. What I can say about CTI is if we look at our latest quarterly report ending January 2020, we showed that CTI generated income of about a little over $400,000 US for the month of January. If we annualize this, then that works out to about $5 million US in annual revenues for CTI, which would generate $500,000 in royalty income for FinCanna, of course in US dollars. If we add on the royalties of $2 million from QBI and CTI at $500,000, then we'd end up with royalty income of about $2.5 million, which is about 3.3 million Canadian. Our annual overhead's about 1.2 million Canadian, which would give us EBITDA over $2 million Canadian, and with a strong expected growth curve. And individual investors can apply their own multiples to this. Regardless, we would be one of the very few companies in the cannabis sector that is profitable. And as our investees grow their income, particularly QBI, one could easily see how our income statement and profits could grow significantly. Next question. How is COVID affecting your business? It's been well publicized that California has been hit hard by COVID-19, but it's also very important to point out that California has declared cannabis an essential service. So unlike many industries that have been very negatively affected by COVID, our industry is protected, and in fact, there have been many reports of increases in cannabis sales in California during COVID-19. But clearly, we can't be completely unaffected operating in California during these times, and our businesses do experience some disruptions. And as I mentioned with Easy Green, the face-to-face time just isn't there as it was in the past. But we are very fortunate to have essential service status. And I'd like to highlight that all of the businesses that we invest in are taking the necessary precautions to make sure their staff are working in a safe and protected environment. Okay, I'm just scrolling through the questions here. Can you speak to the current valuation and expectation for share price over the next 12 months? So the first part of the question to do with valuation, I believe we're trading at such a low valuation because the companies we invested in have been delayed in getting into operation and revenue. And some of our shareholders got tired of waiting and sold their positions. Now, we have 2 investments in operation, and we extended the convertible debenture for an extra 2 years and reduced the conversion price from 20 cents to 15 cents. And I believe that we're now significantly undervalued. For the second part of the question, expectation for share price next 12 months, unfortunately, the rules are very clear that I am strictly prohibited from stating what I think the share price will be. So no, I cannot express my view on this. But what I can do is direct you to our website, which contains our complete list of analyst research reports. And the most recent report, written in May, gives FinCanna a fair value of 29 cents at that time. And this was written before our big announcements in June and July. But I must be very clear that me referring you to this report is not a representation as to future value or price of the shares. And although I can't state my view on future share price, I can point out that we have a very strong and supportive shareholder base that collectively own over 50% of our shares. And I do speak with many of our shareholders, including our largest shareholders, who continue to buy at these very low prices because it lowers their average cost base, and they also see a lot of upside at these prices. And of course, like a number of our other large shareholders, the executive team continues to invest in FinCanna. Looking through the questions here, please work, there's a few duplicates as well. What is your plan for new royalty investment opportunities? Well, currently we're focusing only on our existing investments. And now once these are successful in contributing growing monthly royalties and we grow our treasury, there will be lots of opportunities for future investments. We are seeing more and more companies that need financing, and their valuations are coming down. When we're ready, we are confident that there will be excellent investments to add to our portfolio at the right time. Okay, just sort of bear with me while I'm scrolling through these questions here. There's quite a few. Here's a question. Why did you increase your investment in QBI? Okay, I love that question because Quite frankly, it was a very easy decision to make by our investment committee. QVI really ticks all of the boxes. They are in co-manufacturing in the edibles business with significant barriers to entry, limiting both future competition and their customers from expanding on their own. And edibles, once again, is one of the most exciting sectors to be in. QVI is ideally located geographically and in the lowest tax jurisdictions in California. Now, they have an excellent team with significant experience, and they're truly a real pleasure to work with. And with us owning 70% of their economic interest, this is a really big, source of cash revenue for us, and entitled to 70% of their, gross proceeds of sale. This could be a very, very large number for our shareholders. And I think I got time for one more question here. Please bear with me. Oh, here's one I get asked often. So, as this is unfolding, but the question is, what effect will the November U.S. election have on the cannabis industry? That's a great question. No one has a crystal ball, but, in fact, it looks like, the U.S. election is already having a positive effect on the cannabis stocks. There was a recent article put out by Canaccord Genuity, which is one of the largest banks in the cannabis sector, that noted that for the fourth month in a row, its U.S. cannabis index outperformed its Canadian counterpart and was up 32% for the month. That would be July. The article states that the main factor for driving stocks higher was an announcement in the second week of July from the presumptive Democratic presidential nominee, Joe Biden, of his Unity Task Force recommendations that in a Biden presidency would look to, number one, decriminalize marijuana in the U.S., number two, reschedule cannabis out of its Schedule I classification, number three, assert that the federal government will not use its resources to interfere with legal cannabis regimes at the state level, number four, launch a number of social/criminal justice reforms and record expungements for former cannabis prosecutions. And although this would not represent full legalization at the federal level, it represents yet another step in the right direction while providing a strong mitigating risk factor for investors still yet to jump into the space. We expect that if Joe Biden wins, then this would have a major positive effect on the U.S. cannabis industry, and of course, us being part of that would have a major positive on us too. I apologize if I did not get to your question. There's a lot of them here, and I encourage you, please contact me directly. My information is available on the website, and I'll be very, very happy to answer your question in person. Thanks for your time. Really appreciate it, and thank you for listening to the presentation.